Hello everyone and welcome back to my channel, where we break down the stocks that could make or break your week. Next Monday, October 27, it's tech with earnings reports that could shake the market. We are talking about giants in healthcare, tech and waste. Yeah, even trash is big money right now. Today I'm diving into the tech companies by market cap reporting that day, pulled straight from Nasdaq. For each I will cover what they do, the latest buzz, good or bad, that could swing their stock and their EPS forecast. If you are trading or just curious, this is your chat sheet. Let's jump in, starting with the biggest beast, and that one is over $117 billion. And now, let's talk about the stock number one, and that one it is Welltower, ticker Well, with a whopping $117 billion market cap. These folks own and manage senior housing, medical offices and nursing homes. Basically, they are the landlords powering America's aging population boom. As baby boomers retire, demand for spots like independent living communities is exploding. Good news? Just this week, analysts are buzzing about their Q3 earnings drop after the bell on 27. They beat last quarter EPS by 79 cents, sending shares up nearly 5%. Plus, S&P and Moody's upgraded their credit ratings. That's a vote of confidence in their debt handling. Revenue jumped 40% year over year last time. Consensus for Q3, it's $1.30 EPS, up from $111 last year. But watch for rising interest rates squeezing real estate, could crimp expansion. If they guide higher on occupancy, their rate could rally 5 or 10%. Solid defensive play in a shaky market. Speaking about the news, a quick update before we move on. Just today, on October 24, big institutional players are peeling into Well. Asset Management One boosted their stake, Sumitomo Mitsui Trust Group added more shares, and Blackley Financial Group ramped up too. That's not small potatoes. They are savvy funds betting on Welltower senior housing surge. And it's not just them. Recent fillings show Whittier Trust up 5.7% in Q2. Plus UBS lapping a buy rating with a $195 target. This scream confidence ahead of earnings. If you are eyeing rates, Wells looking like a winner, green light for growth. Speaking also about the revenue chart, from under $4 billion in 2020 to a massive $9.3 billion now, exploded 32% year over year in Q2 alone. That senior housing demand on fire, with occupancy up 4.2% and the revenue jumping 4.9%, and these represent massive numbers for a REIT. And now, speaking about the stock number 2, and this one is my favorite, Cadence Design System, ticker CDNC, at an almost $92 billion. They are the wizards behind the software that design your phones, chip and AI brains. Think electronic design automation tool that let engineers simulate circuits before building them. In terms of huge positive lately, their Q2 crushed it with almost 20% revenue growth, beating on bookings thanks to AI demand. Partnership with chip giants like Nvidia are fueling hype. Headlines say they are shaping the next tech wave. Stock up 4% this week alone, closing near $337. Forecast is $1.43 EPS for Q3, a nice jump from $1.25 last year. But here is the risk. Broader market jitters on tariffs could slow client spending. If AI bookings stay hot, expect a pop. Otherwise, volatility. This one is for growth chaser. Speaking about the news, institutions are loading up big time. Just yesterday, October 23, Brookstone Capital Management grew their stake and Phoenix Financial did the same on October 22. Paragon Advisors LLC, they are holding $2.76 million worth, a clear vote of confidence in Cadence AI chip design edge. It's a trend. Recent fillings show 87% institutional ownership, with boots like Asenagon Asset Management up 400% in Q2. Analysts are loving it. Piper Sandler just hiked their target to $380. This spells upside for earnings. Cadence is prime for soar if AI hype delivers. What do you think about Cadence? Looking at the Cadence revenue, they hit $5.1 billion over the last year, up 22% from before. Q2 jumped 20% to $1.28 billion thanks to hot AI chip demand. Steady climb means strong sales ahead. And now, talking about the third company, Waste Management, ticker WM, with a market cap of $87 billion. Don't sleep on trash. They collect, recycle, and turn landfill gas into renewable energy across North America. It's the unsexy backbone of cities with a side hustle in selling compost and mulch. Brickspot Q2 revenue hit $6.43 billion, up 90% with EBITDA margins at 30%. They are investing $3 billion in green tech through 2026 and just opened Investor Day registration, signaling big plans. Analysts see steady growth for EV charging and data center waste boom. Q3 consensus 2.1 cents EPS, edging up from $1.96. Downside, fuel cost or regulation could bite, but in a recession people still throw stuff away. This defensive stock could shine if market wobble. Breaking on waste management, institutions are scooping up. First Citizen Bank and Trust boosted holdings yesterday, and Global Investment now holds $9.11 million stake as of today. Analysts agree. Benzinga latest says Q3 EPS forecasts are climbing higher with consensus at $2.01. Whittier Trust just upped theirs to 83% institutional ownership, signals strong backing. Earnings look solid, and waste management is a safe bet for steady gains. Speaking about the revenue, waste management revenue is climbing nicely, up to $24 billion over the last year. Q2 hit $6.43 billion, a big 90% jump from the last year. Trash collection and green energy deals are driving it. It's a solid growth for steady times. The number 4 from the list is NXP Semiconductors, ticker NXPI, with $55 billion market cap. They make secure chips for cars, factories, and IoT gadgets like the brains in your keyless entry or EV battery management. The fresh win, board just hiked the interim dividend to $1.01 per share, payable October 4. That's a 15% yield, signal of cash confidence. Q3 results dropped the 27. They are guiding steady amid the auto recovery. The EPS forecast is $2.74, but down from the last year, $3.03. Watch the supply chain hiccups from global tensions. The positive is that EV and industrial demand is surging. If they beat on auto chips, shares could jump, else trade wars loom as a drag. Speaking about the news, institutions split bar leaning in. Ethic Incorporation bought over 1,000 shares today. Arga Investment Management acquired more, and Loring, Welltower, and Coolidge scoop up shares yesterday. Stratos Wealth Partners trimmed theirs through. The net positive, over 90% institutional ownership of recent adds like Phoenix Financial up 88%. Auto chip demand could override the noise, and they are bullish on Q3. For the revenue, NXP revenue peaked at $30 billion in 2021 but dipped to $12 billion last year, down 6% in Q2 to $2.93 billion. The good news are the Q3 guide points to $3 billion upstick, showing auto chip rebound. The fifth company from the list is Hartford Financial, ticker HIG, with $35 billion. Old school insurer covering homes, cars, and businesses, plus group benefits like life and disability for employees. The recent lift is that UBS bumped their price target to $152 this month, and Wells Fargo kept a buy rating. Q3 earnings after hours are on 27. They are riding premium growth in a high rate world. The consensus EPS is $3.13, way up from $2.53 last year. The tailwind means the strong economy, and that means more policies sold. The risk catastrophe claims from storm could spike, and we have seen that in the past. Speaking about the institution, they mix today. Groundwell Capital grabbed over 2,000 shares. Principal Wealth dropped 200k into a new position, but First Citizen Bank sold off, and Steven unloaded almost 3,000 shares. Overall bullish tilt, 93% institutional ownership with fresh buys like Capital Investment Advisors, almost 2,000 shares in Q2. Premium growth should shine in earnings. It's a steady peak. Also, similar, speaking about the revenue has bumps, peak near $30 billion in 2021, dip now at $32 billion last year. Q2 jump 8% to $5.2 billion with premiums up 10%. Steady rise means reliable insurance growth. Okay, the next company from the list is Arch Capital Group, ticker ACGL, with a $32 billion market cap. Bermuda-based pros in reinsurance and mortgage insurance. They backstop big risk from their insurers from floods to home loans. The key update Q3 report is on October 27. Last quarter operating EPS hit $2.58 with 70% book value growth. Analysts praise their discipline in competitive markets like cyber insurance. The forecast for this quarter is $2.14 EPS, improving from $1.99. The positive is that higher rates boost investment income. The negative is that more natural disasters could pressure claims. If ROE stays over 20%, it's a buy the dip candidate. Now, looking at the revenue, you can see that it is on roll up to $20 billion last year, with Q2 hitting $5.2 billion, a solid 23% jump from before. Now we are approaching the end of the list, and on the 7th position is Celestica, ticker CLC, with $32 billion market cap. Canadian manufacturing powerhouse building electronics for cloud giants like server, switches and now AI hardware platforms. The hot streak just launched 1.6 terabyte switches for AI cluster on October 10. Perfect timing for data center boom. The Q2 revenue up 21% to $2.89 billion. Full year guide now $11 billion, a 20% jump. The Q3 EPS is at $1.33, soaring up from 93 cents. Upside is that Ethernet shift from InfiniBand to grab Nvidia market share. The downside is that supply chain it's difficult. This AI rider could double if demand holds. The CLS revenue is exploding up to $10.6 billion over the last year, with Q2 at $2.89 billion, a sharp 21% rise from last year. AI server demand is fueling it, and you need to look at it. On the 8th position is Nucor, ticker NUE, with $31 billion. It's a steel market, guiding $2.05 and EPS for Q3, down a bit from Q2 but up from last year. The positive is that new Utah plan for utility towers amid EV grid growth. Steel prices are volatile, and you need to take a look. If you look at the revenue, you can see that the revenue hit almost $30 billion last year, with Q2 2025 up 5% to almost $9 billion. Earnings grew at $2.60 per share. Still demand is strong, but the finance card above shows a solid $138 price today. The 9th company from the list is Brown & Brown, ticker BRO, with $29 billion insurance broker. 10% dividend hike to reward shareholders, acquiring UK underwriter Pardus, and speaking about the EPS forecast is 90 cents. It's flat but it's steady, so it's a good opportunity. Looking at the revenue, you can see that it climbed to $1.29 billion in Q2 2025. It is up 9% from last year. The finance card above shows a solid $88 price today, with Q3 expected at $1.51 billion. It's steady growth to watch, and it's important. And now the last company from the list is Cincinnati Financial, ticker CINF, with a $24 billion market cap. It's a P&C insurer. Q2 net income exploded to $4.34 per share on investments. Their recent dividend paid on October 15. The consensus EPS is $2.01. Looking at the revenue, you can see that it hit over $11 billion last year, with Q2 2025 up to $3.25 billion, a big 28% beat over estimates. Net income doubled to $685 million, strong premium and investments shining through. And now we are at the final of the episode, so thank you for watching. To be honest, I'm a little bit tired, there are a lot of companies, and this is your October 27 playbook. This could move markets, so tune in post earnings. What stock are you eyeing? Do you know which one is your favorite? Comment below, smash like, it help, and do subscribe for the full week preview. See you in the next episode for the next day, so thank you and bye.